Welcome to Coach Oge. For some of you that have been following me for a long time, you will notice that I recently changed my YouTube channel from Portfolio to Coach Oge. So, because I think that Coach Oge reflects what I do on YouTube, basically, which is teaching you stocks to buy and then showing you what I do in the stock market. Although, because you don't get to see my videos every now and then, doesn't mean I've not been trading stock. So I have a community which I pay a lot of attention to. Most of my analysis have been shared with my community. I don't just drop stocks anyhow. YouTube, I make sure I serve my community first because these ones they actually paid to get premium access. But then I would always come here to share one or two stocks to buy and just to give you a teaser of what is actually in our community. And then if you look at my YouTube channel, take your time to go through all the stocks that I've recommended. You will see that majority of them, from the prices I recommended them to what their current market prices is, have shown significant capital appreciation. Not because I gamble or I'm perfect in the market, but because I follow three-step processes in understanding the stock market, especially as a trader. Number one, I look for what to buy by checking the fundamentals of whatever stock I want to buy, which many of us are already used to, but then they end up losing money because they don't move on to the next stage, which is the sentiment, understanding investors' emotion towards the stock, knowing whether the stock is actually what everybody is buying, because you're not the only person buying that stock. Whatever amount you put on that stock might not even move the company stock price. But then you want to be sure that others are seeing what you're also looking at. Others are also attracted to the stock because it's when people are buying a stock or bidding the stock that the prices will go up. You don't want to be the only one that is bidding that price. So that's why I don't joke with sentiment analysis because I feel that if the stock is okay, then others should also see it. Then finally, I pay attention to technical analysis because it tells me when to buy. In short, timing is very key in the market because stock prices go up and down. Stocks don't go up in a straight line. Stock go up in a wave pattern, wave up, wave down. So you don't want to buy a stock when it's already overbought, when the price have moved to an extent where it's considered overbought, and then you want to go in. I think that's when a lot of people lose their money. They buy into a good stock at the wrong price. Why? Because they don't understand technical. They don't know when buyers are in charge of the market or where sellers are in charge of the market. So that's the problem. That's why timing is key. When you bought a stock to a large extent determine whether you make profits or not. So in this video, I'm going to share one hyper profit stock to buy right now before it's too late. In short, this stock gave us a perfect buy opportunity last year when I had my webinar on. Let me go back to my YouTube channel to show you something. For some of us that joined my YouTube channel last year, when we had our webinar. So let me go to YouTube, not Coach. Okay. I'm supposed to check YouTube. Yes, I want to show you something. Now, when we had our webinar last year, on four stocks. Yeah, this is it here. Top five high yielding Nigerian stocks to buy for 2024. I dropped three stocks from here. And then I said only people that get the one chart pattern would have access to the five stocks. Now, one of the two stocks that I didn't drop is actually what I'm talking about right now. Now, that stock had delivered good results. In short, Peter appreciation from when I recommended it at this stage. That was from December 4th. So I think I was around January or thereabout. Now the stock eventually pulled back. Pullback is normal. Price don't go up in a straight line. So the stock is offering another buy opportunity right now. Now I'm going to tell you why the stock is a buy. And most of my trading strategy isn't just limited to fundamental sentiment and technical. I also look at the economy. So I will tell you how CBN itself has created a buy opportunity on the stock that I'm going to share with you right now. So I call it a hyper profit stock because number one, it's a penny stock. So, and then if you find a profitable penny stock that is actually emerging from the bottom, then you have access to a huge or much opportunity. So that is what I'm going to share with you right now. Like I said before, I've been sharing tips in my community. So if you're not in my community, you can go to globefolio.com. Just visit globefolio.com. We recently completed our web version. This is globefolio.com, where you're able to see my subscription, access to my subscription, how to access my community. So this is subscription plan on globefolio.com. I have the basic, standard, and hybrid. So this the basic is for people that want to trade only the Nigerian stock market. Standard is for people that want to trade the US stock market, and then hybrid is for people that want to trade both markets. So you can go on to join the community. Just click join now, register. Once you register, you'll be able to see the subscription plan in your account. The platform is already integrated with Paystack, so subscription is automatic. So it probably doesn't require any manual work again, which is what I've been working on all this while. So let's continue. Now, what exactly is this stock? But then let me tell you something. When you are investing in the market, don't just jump into the stock market and start selecting random stock. For people in my community, I share this secret every now and then with them. I tell them, understand the trend, know what is happening in the Nigerian economy. It is very important. You can't be successful as a trader or an investor if you don't follow economic trend, because it's actually economic trend that creates economic opportunities. So no matter the direction of the economy, there will always be a sector that is benefiting from it. That's one thing I've noticed. That's one major fact in the Nigerian market. Note, there's always one sector that will benefit from economic trend, even government policy. When you go back to last year, I shared this multiple times in the community. I don't want to talk about it again. But here, I want to look at one of the hottest trends right now, and that's the fact that CBN is actually looking to tighten monetary policy. So CBN monetary policy and how it affects the market is one of the things you're going to learn in this course. And then I will tell you the opportunities to invest in during rate hike. That's a fixed income market and also interest rate sensitive stocks. So this is where I will now talk about the stock that we should be investing in. Now, recently, CBN has just increased interest rates to 22.75%. Why? Because it's looking to tighten inflation, it's looking to suck money out of circulation, blah, blah, blah. And then whatever English you want to speak. When I keep telling my community, CBN is only being deceitful, CBN is not sincere. CBN cannot address Nigerian current inflation woes with interest rates, because the inflation woes we're experiencing right now in Nigeria is a structural problem, from insecurity to road network to power issues. So tell me how interest rates is going to affect that. It's not possible. CBN is only increasing interest rates to attract foreign investors. They are only doing that to please the foreign investors. Why? Because at some point last year, in one of my webinars, I shared with my community how that the foreign investors have told CBN that it only needs to jack up its interest rate for them to bring dollar into the economy. And if you're also familiar with my course on exchange rate to income, there's this course I have on my platform, which is called Exchange Rates to Income. Now, in that course, I discussed critically the factors that have been responsible for increase in exchange rate. Let me show you that particular course. Now, it's like a bonus. It's not a course on its own. It's like a bonus on this explosive stock. So most people that got this explosive stock video course, they have access. You can see it's a bonus course, exchange rate to income, and also it's an ebook, 3 hacks to pick next booming Nigerian stock. Now, I also discussed it right here. Now, if you have watched this exchange rate to income, you will understand the different types of dollar we have in Nigeria. Here, I discussed the two types of dollar in Nigeria and how that CBN is only interested in one of the, that is what? Foreign portfolio investors. There are two types of dollar, foreign direct investment and foreign portfolio investment. So that's where dollar comes from. Now, I said foreign direct investments are patient capital, foreign portfolio investments are hot money. So CBN is only interested in hot money and not patient capital. So if CBN is increasing interest rate right now, they are only doing that to attract hot money. Let me even see if I can find a post on Nairametrics on how, yes, this is it right now. This is it right now. So I want to show you two contrasting posts. Two contrasting posts. Okay. Now, look at these two contrasting posts right here. The first one is saying that foreign investors dominate bid for OMO or Treasury bill. Should you be surprised? No, because that is exactly the reason CBN is increasing interest rates. CBN is doing that to keep these guys. Why? Because majority of the dollars we have were actually supplied by these guys. That's it. So they will always do everything possible to make sure that these guys are actually still in Nigeria. And the only thing they can do is to increase interest rates. So that's why you see them dominating bids for OMO Treasury bill. Now, within the same period, look at this. Was 1 week ago. Within the same period, it was released on Punch. This is 14th of March, and this webinar was recorded on 16th. That's 2 days ago. Foreign direct investment withdrawal will continue in Nigeria. Now, how can you explain that? A situation where foreign direct investment is actually drying up and foreign portfolio investment is increasing. Do you understand? That explains the two types of dollar we have in Nigeria. And normally, we were supposed to get more of this foreign direct investment because it is foreign direct investment that creates opportunities, that creates jobs, that develops an economy, and not foreign portfolio investments. These ones are coming to make more money. They are not coming to develop your economy. That's why they are channeled to stock markets, fixed income markets, and all that. So you need to understand this stuff here so that you don't get excited. And if CBN is now coming to tell us that reserve has increased by whatever percentage, I think they should be ashamed telling us that because that increase in reserve is not driven by a factor that is sustainable. It's driven by this foreign portfolio investment. If anything happens in Nigeria economy, what happens? These guys will take their money out. Who is going to supply the dollar that these guys will need when it's time for them to repatriate their fund? That is where the pressure on Naira will mount, which will most likely lead to more devaluation in the future. So you could see that CBN increase in interest rate today is actually opening a tap for more devaluation in the future. I don't want to talk about that. When you go to exchange rate to income cost, you understand this factor very well. And then each time you see a dip in Naira, in dollar, you most likely take it as a buy opportunity until there is a reversal, meaning we want to see foreign direct investment dominate Nigeria. I want to see foreign investors dry up. That is where the real development and the factor that would most likely lead to Naira stability or Naira surge. That's where it will surface. But then let's continue. I'm just explaining the CBN monetary policy. Now, how does this affect the stock market? Simple. People are always looking for opportunities everywhere. People want to invest in an opportunity without having to take on more risk. So if you look at the stock market, an increase in interest rates tends to affect stock because money flows away from equities. How many stocks can give you 20% dividend right now in the market? But if you put your money in treasury bill, you're going to get that kind of return. So it's natural for mutual funds, pension fund managers to reallocate or to reshuffle their portfolio, move some money away from stock, especially after over like 4-year rally. The Nigerian stock market has been in a long-term uptrend for a long time. If you go to ASI, you see the trend here. The stock market started the bullish run in 2020. You can see the massive uptrend right here. So it's normal for the market to probably prepare for pullback, or it's normal for you to anticipate pullback very, very soon. So that is my take. Now you could see the market surge higher. One truth is that even if the stock market is collapsing or correcting or pulling back, it's not the stock that will pull back. There will always be top gainers or top losers in the market. The only thing that happens is that when the stock market is going down, a larger number of stocks tends to correct, while a fewer number increases. And if the market is going up, a larger number of stocks tends to rally higher, and then fewer stocks tends to go down. But you hardly see a situation where all the stocks in the market are going down. It doesn't happen. So look at the Nigerian market, the history. Even in years where we've had bad performance and all that, there are always top gainers for the year because the market will always be like that. So that is the effect of the CBN monetary policy on the stock market. Number one, if you are into stock valuations, you notice again that whenever you value a stock using a higher rate, the fair value of that stock tends to dip. So there are many reasons to explain this part, but I don't want to go into that right now. So what are the opportunities in the market? Now, like I said before, the hottest trend in the market right now is interest rate hike. So your own job a trader or an investor is to look for opportunities in the market. First one is fixed income, which is normal. Treasury bill is paying as high as 15, 20, 25%. So meaning if you put your money in treasury bill or government bond, you're actually going to earn more from that upfront payment because of the rate hike. That's one. But now the essence of this webinar basically is to show you one hyper profit stock to buy in the market. And what is a hyper profit stock? First one, based on the economic trend, interest rates. Now, interest rates will most likely affect interest sensitive stocks. So let's talk about interest sensitive stocks. And it is in these interest sensitive stocks that we're going to find the hyper profit stock, because the next stock that will run highly higher are stocks that are benefiting from the hottest trend. From last year, you saw how the CBN cash policy affected banks, helped banking stocks to rally higher because of surge in mobile banking. Within the course of last year, too, we saw the removal of fuel subsidy and how it boosted oil stocks. And then the same period last year, CBN devalued the currency. And then what happened? It helped banking stocks. It helps a few stocks that generate FX earnings. So you will see that as trend emerges, as we move on from one event to another, there will always be sector that is benefiting. So your own job is to move from top performing from worst performing sector to top performing sector. A time will come, the top performing sector becomes worst performing, you move money away. So sector rotation tends to be one of the best strategy to make money in the stock market. So here we're going to look at the best stocks to invest in. So with help here, we're looking at interest rate sensitive stock, but let's look at the effect of interest rates. Now, when there's increase in interest rates, what happens? It helps to boost finance, banking, and insurance stock. And then I said interest rates boost companies that rely on interest income. Now, example of companies that rely on interest income are banks. When banks give out loan, what are you supposed to do? You're supposed to pay back your loan with interest. So is one. Number two, finance firm. Finance firm that invest in different opportunities. Maybe if you have a private equity that is listed and they are focused on the money markets or fixed income markets, mutual funds, they benefit. So if you have a mutual fund that is listed, that's also another opportunity. Then the third one is insurance stock. I said insurance interest rate favors insurance stock more than the banking stock. How does that why did I say so? You know, when you give out loan as a bank, there is this risk or tendency that the borrowers might default. So that's the risk. Even in short, it's happening right now because Nigerian businesses are pressed, Nigerian businesses are suffering. So not many of them can actually pay back the loan that they might have secured from the bank. But then when you look at the insurance companies are enjoying free money. That's how Warren Buffett made his money. Insurance company will collect premium from you and then to cover up a certain period, maybe you take up an insurance policy within a period. Now, that money they've collected from you, they are supposed to invest it. They invest it in fixed income market. So free money flows in through premium because when your insurance period or the period within which that insurance policy is supposed to be active expires, then that money belongs to the insurance company. So when that money comes in, they invest it in fixed income asset like treasury bill, bond, commercial paper. So now, when interest rates increases, now these guys are going to make more money because the return from bond, return from interest rate or any fixed income market will be a lot more higher. That's why I said interest rate hike generate free money for companies that have huge cash pile. An example of companies that have huge cash pile is an insurance company. Now, before I just pick random insurance company, I like to understand the business of insurance itself. So I have a course on how to analyze insurance stock. How to analyze insurance stock. I think that course will help you to checkmate any insurance company. This is it right here. How to analyze insurance stock. Did I put it here? Oh, I think I missed it. Let me go to the second page right now. How to analyze insurance. Yes, this is it here. How to analyze insurance stock. This course will help you how to analyze. So this course will help you tear down any insurance company, you will find insurance companies that are profitable, like profitable, and then are able to confidently buy into them. If you're looking for the best penny stock, insurance companies actually where you find a lot of them. Now, it is not all penny stocks that are investable. It's not all penny stocks that are tradable. How do you know which of them is investable? What are the things to watch out for? This video would guide you on how to analyze insurance stock. Now, one of the insurance company that I'm fully invested in because they pass this check, because they're actually generating a lot of cash. They are profitable and they are emerging from the bottom, which I had mentioned last year is Royal Exchange. Royal Exchange stock is one you should watch out for. Let me go back to my chart and show you something on Royal Exchange. When we had our webinar last year in, I think, December 4th, going by the YouTube channel, Royal Exchange was selling for around 60 kobo. You can see here, around December 4th. December 4th is within this period right here. Royal Exchange was selling for around 60 kobo. Now, you see that from December 4th into January, real exchange topped a high of 1.05. So let's say 1 minus 0.6, which will give us 0.4. 0.4 divided by 0.6. So real exchange has surged by almost 66% in 2 months, 2, between December and January. It did 66%. Now, the stock is actually experiencing what I call a pullback. A pullback. So it's normal for any stock that rallies like this to experience a pullback. So a lot of people, the fear will quickly sell off. So what I did was to sell at 1 naira and then looking to re-enter again. So although I didn't sell everything right here, I sold some portion because I saw more upside coming this year. So I sold some portion and then started buying more units at the bottom of the market. So that is on Royal Exchange stock. Now, why am I picking Royal Exchange stock? Royal Exchange is not the only stock that actually passed my checklist right now. In short, I have been recommending stocks back to back. One of the stocks I've recommended previously that are done well. In short, I posted it some days ago, is GT Bank. If you follow my YouTube channel, I talked about GT Bank and how that GT Bank might probably reach all-time high and how that GT Bank is the only banking stock that is yet to move when you compare the movement on other banking stocks. And then look at it here. On that was 6 months ago. I mentioned how GT Bank is a buy at 38 naira. At 38 naira. And then if you look at GTB stock today, GTB stock is currently sitting on 48 naira. GTB banking stock is sitting on 48 naira. So I'm waiting for this to load. I'm experiencing slow internet service. So apologies for that. So this is GTB right now at 38 naira. So right now GTB is selling for 40. You can see here, you can see selling for 48, and I'm literally might be looking to retest its all-time high, almost 55, 56 naira. So that is GTB right here. So when I analyze stock, I take my time to understand certain metrics, especially events that would most likely drive this banking stocks to a new high. So Royal Exchange, why did I recommend Royal Exchange? Like I said before, this is not the only insurance stock I'm looking to buy. I have another solid insurance stocks that I'll be dropping in my community next week. I've taken my time to analyze the stock and then it passed on my checklist, except that the price is yet to move above a level, which I always wait for confirmation. But then I will most likely share with my community and then put it on the watch list so that you can watch the stock. The moment it passes that checklist, then it's a buy. Now, why did I recommend Real Exchange? Number one,